All right, today we're going to dive into some ETF news, but also some analysis from the experts, really looking at the potential of what ETFs might mean for crypto in general, but also, of course, Bitcoin. We'll dive in deep. My name is Paul Barrett. Welcome back into TechPath. Joining me today is James Seyffart, who is an ETF analyst and over at Bloomberg Intelligence. Great to have you back, James.
Thanks for having me on, Paul. Happy to be here.
Excellent, excellent. Last time we had you on, early stages of a lot of the ETF activity. I won't let you off the hook about the ETH ETF, though, because we're going to ask you about that, the potential. But I want to go into, first of all, a little bit about what's been happening over the last 60 days. And most of this has been around the potential for Blackrock. And let's just kind of get that question out of the way. Obviously, Blackrock, I would say, the number one, at least institutional asset manager out there that's being looked at as possibly could be the leader. In your opinion, you look at all the filings that have been made, what is going to happen when we do get these approved? If they all come at once, do you feel like BlackRock just automatically wins the race here because they're BlackRock, or do you think there would be some others that could really win some marketing points?
Yeah, so the way that we look at the space is it's a winner take most world, right? Like it's not like there's going to be a winner take all type situation. You can't overlook the fact that Grayscale already has 20 billion in assets right now based on the current valuation. So they're also going to be a big player. So there's going to be, but anywhere we look in the ETF space, there's usually one big leader who gets most of the assets, possibly most of the flows and the trading volume. But usually there's other aspects of what these issuers will find ways to differentiate themselves. So in gold ETFs, some ETFs are going to be way cheaper than the most liquid ones. So that's grown. Some are going to store their gold in Swiss vaults instead of the London vaults. So I suspect we'll see something similar on the Bitcoin side of things. You're going to have issuers that are going to focus on the fact that they've been dealing with advisors themselves and talking to them about what this space looks like and what it's going to look like, and offer to be like, we know this space very well. We're not just an asset manager. We're putting blockchain and crypto first, so people focus on that. And then the people that will say, like, we're going to lend out the underlying Bitcoin and give you dividends or offer very, very near zero fees. Some will talk about like different custodians. They're going to possibly market on the custodians they're using. As we know, we've seen that has been an issue. So there's like a whole bunch of different ways, but it is likely to be winner take most in this world. And BlackRock obviously is likely to be the leader, but the idea that we have GBTC and Grayscale already existing with 20 billion in assets that's a huge thing to hurdle, even if you're BlackRock.
Right. So based on you guys' analysis, if you look at the ETF services that could be offered, because there's probably going to get some fairly creative services within these companies, what do you think would be one of the most critical things that a BlackRock or a 21 Shares or even a Fidelity could bring to the market to say, this is what we're going to do, we're going to come out and kind of hit with a splash and try to draw in these investors?
I mean, the easiest, most simplest one is going to be fee, right? No matter what you do, no matter what your offerings are, if you're charging double the price of everyone else, you're going to have a hard time competing, right? But also, you hinted at it. We think there's going to be a lot of marketing around here. BlackRock is likely going to market the hell out of this. You're going to see ARK and 21 Shares. We've already seen VanEck start to market this type of stuff already. So we're going to see a lot of these players try to market and get to advisors and directly to retail. They're going to be talking about why their products are better versus the others. But like I said, it tends to be a winner take most type world in the ETF space. All right, particularly so when you have like just a single asset here, right? Like it's just giving exposure to this one thing. So people are going to differentiate on like what they do as a firm and the products individually, and who knows where it's going to go. But like I said, one of the things I did mention is like in gold, there's some ETFs where like if you have enough money, for the most part, you can't like redeem the actual gold. But there are some ETFs that like if you have $10,000, they'll deliver it right to your doorstep, things like that. So there might be a similar situation in crypto down the line. It won't. Not initially, but that might be a case down the line where, like, if you have a certain amount, they'll send it to a private wallet.
Right, right. Okay, you mentioned something here about retail, and because I look at this, and this was in reference to an article, crypto reshaping the American dream for younger generations. This is a report by Coinbase, and within the Coinbase or the Coinbase report, there were a few things that they pointed out to. One, of course, was this millennial age group, 26 to 40. And a lot of this was around just crypto and blockchain as kind of the future of finance. Millennials really see this as a big opportunity. When you look at retail and you look at the current runway for a lot of these institutions today, Do you feel that the target audience, because it seems like the millennial audience could be the new holy grail of the investment class, especially in reference to retail, do you think owning that would possibly put someone out in front, or do you think it's going to be kind of old school capital that could be leading the way at first? What are your thoughts on that?
Yeah, so specifically for the ETF, it's probably going to be more the advisor type of space that is going to
Mm-hmm.
be looking at this. I mean, if you're a retail person, anyone, if you really wanted exposure to this, you could have downloaded Coinbase or Gemini or any app, you name it,
Exactly.
FTX. And you could buy at the click of a button, right? So one of the parallels we like to look at is like when gold ETFs came out, they democratized investing in gold. Yeah, you could always go down to like the corner street and buy like some gold coins, but that's very different from having it in a like professionalized portfolio. So that's more what the ETF is going to do, right? Like it's not. We don't think the one thing it will do for retail potentially is if you're a trader and you're like to trade these things in and out, the ETF is going to be way cheaper than a lot of these platforms. It's going to trade penny wide. There's going to be no commissions, which is not the case for most of these platforms. So the real people that are going to use these products, if and when they get approved, are really going to be institutions and advisors who maybe they have clients who have money in their own personal accounts on some of those apps I mentioned. And it would just be way better if like we could control it. If an advisor, they know exactly how it is, they can basically sell when it gets too large of a portion of the portfolio and buy more when it dips below, because we all know how volatile the market is. So just getting that professional management. And also from the advisor's perspective, if I'm an advisor and you're my client and you're buying this on Coinbase or FTX, I don't know what you're doing. And
Yeah.
also I'm not making money. That's not under my purview.
Mm-hmm.
Like typically, most advisors nowadays, they charge an AUM fee. So whatever those total assets are, they're going to charge a slight fee on those total assets, and this brings this under that umbrella. So what the ETF is going to do is going to put DeFi on the TradFi rails in a way that hasn't been done yet, which again kind of goes against the ethos of many of these things. But it's not going to detract from the underlying ethos of Bitcoin and what people want it to be. It's just going to be additive to people who want it in a different basically wrapper.
Yeah. I was looking at your partner, Eric Balchunas, in there. This is, one of the many reasons so bullish on ETFs and think they'll dominate for decades to come is their usage is inversely correlated to age. 89% of millennials say the vehicle of choice versus boomers, which is, though it is increasing in the survey data that came in from Schwab. But I guess the future is really going to lean toward these other alternative investors who are going out to advisors and saying, "Hey, I've got some assets here I want under management, and here we go." And with that being the case, you've already got a mindset that's starting to restructure how capital might be deployed in the future. Is that something? Where do you think the switch would happen? Is there a time frame that you say, okay, maybe over the next 3 years, we could truly see a shift in the demographic data that could push these ETFs into kind of a stratosphere?
Yeah, so like if we're just looking at ETFs in general, one of the things I track, now I obviously don't just cover crypto, I look at the whole space.
Mm-hmm.
And one of the big trends we're covering is mutual fund to ETF transition, which goes to a lot of
Right.
those things that Eric was pointing out.
Mm-hmm.
Specifically on the ETF side, it's not going to be like these things launch and all of a sudden they're going to get like billions of dollars in 1 week. It's if it like I said, it's going to be institutions. So a lot of institutions, endowments, pensions, they have restrictions on what they can and cannot hold, right? So they have to hold securities or bonds or what have you. They can't hold this thing directly. Putting it in an ETF
Yeah.
wrapper allows them to hold it. So if there is there, and we know for a fact there are institutions out there that want to have a 1% allocation to this thing, this might be a way for them to do it. The other part of it is basically it's the advisors, right? They're not going to if they want to put maybe some portion of their clients they think would fit to have a 1, 3, 5% allocation to a product like this. They're not going to do it the day it launches, right? They're
Yeah.
going to do their due diligence. They're going to look at things. They're going to slowly put it in over time. So it'll be like an allocation that goes on over the next 1 to 3 years, kind of like you mentioned. So it's more about the long-term impact of these things being launched than necessarily like, oh, this week it's launching and all of a sudden it's going to send things to the moon, if you will. That's unlikely to happen in my view, personally.
So obviously we'll get an initial splash once these do hit the market. That's going to be kind of the case. Is there any framework of what you guys think at Bloomberg would be the kind of inflows that would be relevant to what the size of this asset class is? I guess it would be similar maybe to what gold, or is it even similar to gold when it
Yes.
first hit the ETF market?
Yeah, so when we look at gold ETFs, which is like something that people kind of overstate, gold ETFs in the U.S. have 100 billion in AUM.
Ooh.
This is, I mean, ETFs. Bitcoin ETFs aren't going to get there anytime soon, in my opinion. And like I said, Grayscale, I mentioned it twice or three times already. GBC already has 20 billion in assets. So the idea that all of a sudden there's going to be hundreds of billions in these products in any sort of shorter time frame than years or decade out is kind of unlikely. So, but yeah, like I think of the upper limit or in like a 3-year time frame, it'd be that 100 billion number,
Okay.
maybe, but there's no way to actually know what type of money is going to come in. The problem is like we don't know what advisors are going to do, right? Are they going to do that 1% allocation, 3% allocation,
Exactly.
5% allocation? And what percent of advisors are going to use these products? And then also what percent of their clients are they going to want to hold these? Not every, this isn't going to fit for every single client in the world, right? It's going to fit for a subset of clients that they feel like meet their risk profile. So deciding that. So it's hard to really know. Galaxy actually did a really good piece on this. Trying to guess the numbers. They guessed, I think, 14 billion in the first year, but there's also a lot of things going on. We don't know how much money is going to come out of Grayscale because a lot of money that's in there was specifically playing what was going on with the premiums and discounts, and not necessarily like, oh, I want this exposure. It was more like, this is a trade I'm making to bet on the discount closing or to bet on the premium or something like that over the last 5 years. So there might be some flows that are come out of there that might not go into some of these other ETFs. Now, how much of that is going to happen, I don't know.
So here's a question to you: is with Bloomberg, the way you guys analyze ETFs, but also the advisors within the industry, is there any data out there showing the demographic of the actual advisors? Because I would think that if they are falling into the millennial audience, they may kind of be leaning a little bit stronger into these kind of assets.
Yeah, there are a lot of advisors that are leaning into that. So like this kind of gets a little bit out of my wheelhouse. We don't have a lot of the advisor data because most of that is like survey data. There are a lot of really good sources that get into that, and we'll use those other sources and let me try to figure out what's going on. But for the most part, a lot of the advisors are a much older crowd that aren't really interested in this. That said, that if you have a client and you're older and the client says they want exposure to this, this is the way that they're going to do it, right? They're not going to open a Coinbase account for them. They're going to go through and just buy this ETF if it's even allowed. There's a process that could take few months or to 3 years where like these platforms have to get the okay from their like risk metric teams and compliance teams to actually even allow advisors or brokers to even buy these things for their clients. So who knows how long that could take.
You mentioned Grayscale obviously kind of being a potential leader, I guess, going out of the gate. What is the next step for them? Obviously, they've had a much further advancement, but why are we not seeing this just going out as a listed ETF right now?
Yeah, that's a good question. I don't actually know. The real answer is like they won their court case, right? And there's likely a conversation that's happening between the SEC and Grayscale. Grayscale saying, probably pushing the argument that, look, the deadlines and the statutes say if there is no issued order here, then all of a sudden we're approved, and your order was vacated, and that time frame means we are de facto approved, which that's a legal framework that's unlikely to actually ever happen in the real world, but that's probably what they're saying to the SEC. I'm assuming the SEC was saying, no, you're going to restart and refile this whole process, which is a 240-day process to go through this, and then we'll talk. And then I'm sure there's some like haggling going back and forth. We'll make a deal. We'll refile if we get X number of days, like you guarantee we're going to give us an answer, or maybe even just the SEC is telling them we're going to give you an answer on what's going to happen next within the next 30 days. We don't know. It's completely quiet. I thought we would have had an answer to like what the next steps are and what's happening last week. The last week or the week before. So I was like thinking by last Friday we'd have an idea of what's going to go on. And I think I actually tweeted this out. I was like, I don't. We have nothing. They're completely quiet. So we're entering a zone right now, starting tomorrow, where theoretically they could start approving some of these things. Obviously, I'm not saying that's what's going to happen, but like tomorrow is the first date that it could theoretically happen. In the next few months.
All right. So with that being the case, right now, I know you and Eric have kind of been doing these percentage of probability ranges. By end of year, where are you guys at now on this?
We're still at 75% by the end of the year, but we think basically one thing that goes into all this is we think the SEC is going to try to allow most, if not all of them, to launch on the same day. They're not going to play Kingmaker. They played Kingmaker with BITO, which is the ProShares Bitcoin Futures ETF, got $1.5 billion or over $1 billion in 2 days. Dominate, they have 96% of the assets, 96% of the volume. They utterly dominate. I don't think they don't want to do that again. So I think the SEC is going to be try to find these like angles and areas where they can allow a whole bunch to launch at the same time. And like I said, one of those like time periods starts tomorrow and goes through like roughly the 17th, maybe the 21st, depending on with all these other filings. But if you include GBTC, there's 12 active applications right now in front of the SEC. So the SEC might have to figure out a way to do this. So like I said, November it could happen. There's also a period in December. Our view is that the final deadline for ARK and 21 shares is January 10th. And
Yeah.
I just don't think if they deny then by that January 10th deadline, if they wait all the way up until that deadline, which they don't have to, they can go very early if they want to. We saw that in September. They went months early in some of these cases. They will approve by January 10th is our view. We're at 90% on that. Now, that said, if they deny at that time period, it's unlikely that they're going to deny ARK in January and then approve everything else in March, which is when BlackRock and all these other issuers are due. So we'll cross that bridge when we get to it. But we think we're at 75% this year. I think they could try to get it done just like before the Christmas and New Year holidays. So it's kind of a tight squeeze to fit it in like right after New Year's and before that January 10th deadline, unless they have everything ready to go. And again, then the next like opening where we could see like a wave of approvals is later this week, potentially into next week.
Yeah, this week would be a very interesting time frame too, with where some of the markets have been just in the last little bit over the last couple of weeks. A lot of interesting movements right now in terms of pressure, and plus some of the liquidity that started to move into the market. Very interesting. One other area that we've been watching pretty closely, obviously as a media company, is we work with a lot of agencies, and I've noticed in some of the year-end spins that they do. They come in and they'll do these big meetings with us, and they're looking for their 2024 cycle. And we've had a couple of agencies come back in and look for inventory of ad insertions toward the end of this year, which is unusual. I mean, we don't normally see those kind of requests. Normally, it's like, hey, we want to start this in January if it's a fiscal year kind of media product that somebody's got. So I'm just wondering if there's somebody coiling up something here for a marketing run.
Are you saying asset managers are looking for ad space before the end of the year?
Well, I won't tell you who's asking for it, but I will tell you that there are agencies that are highly close to people in the industry that are saying to us, what do you have in inventory in late November, early December? And I'm like,
yeah,
what's going on? What's going on?
Yeah, this goes back to like one of the notes we wrote in basically August was like, we think these things are going to get approved, which a lot of people, even then, were disagreeing with us. Now we're kind of like, that's the consensus opinion, which is nice to go from out of consensus to in consensus over a few months. But one of the things we wrote was like, be ready for this to be a marketing bloodbath. Like you're going to see stuff like in normal life for these ETFs. I was traveling recently and I saw an advertisement in the Newark airport for the Grayscale Bitcoin Trust, GBTC. Like you're going to see Van Eck, you're going to see BlackRock and iShares, you're going to see Invesco, WisdomTree. I mean, these are not nobody names in the asset management industry. And they're going to have no choice basically because their competitors are doing it. I'm sure some of them will try to go a different avenue. Like I said, you can kind of go directly for retail, you can go for institutions and advisors, but I think people are just going to be doing whatever they can to drum up interest in their products. And they're going to be pitching why their product is better or their firm is better for this particular exposure. I'm sure I can basically guarantee you that some of these issuers that are like more blockchain and crypto focused are going to be saying, we know this space really well. What does BlackRock know about this space? And that's going to be something you're going to lean on. How true is that going to be? I don't know, because BlackRock can obviously just hire some people who know, and I'm sure they have. But I can tell you for sure that that's what's going to happen, and there's going to be a lot of marketing. So it doesn't surprise me at all to hear what you're saying, and I've actually also heard that not just from you, but from others.
It's intriguing, because these are kind of unusual times. But again, too, it could be something else. But I'm just saying that those are the kind of conversations our teams have been having. One other question I want to hit you on is Vanguard ruling out that they're going to be doing a Bitcoin ETF. Obviously, this is kind of a known thing. Eric hit this on Twitter there. But with that being the case, I mean, do you feel like the players that are at the table right now on the dance card, this is it, or do you think there could be some other players that could move into this later? Because we did see that in the gold ETFs of other ETFs rolling out later in the cycle. What are your thoughts?
Yeah, so like one of the things that some of these issuers are going to do, one, it's not surprising to us at all. Like Vanguard doesn't even have a gold ETF, right? That they don't like anything that doesn't have cash flows. It's extremely unlikely in our view that they would ever enter this space. Honestly, there are some people in here that I'm a little surprised by, but that are already in this race. There's 12 issuers.
Yep.
I don't think all of these, if they all do launch, I don't think all of them will survive beyond a couple years. That said, some of these larger players, they have like these model portfolios and they deal with advisors that use almost exclusively their products. So even if they're not dominant, where they have like only a small subset of market share, as long as it's like relatively profitable, or even if it's not profitable, but they have enough of their clients who have a subset of their assets in these products, they want to keep them there because that keeps them in-house and keeps those relationships going. So there's going to be a lot of products out there that necessarily are like, oh, these only have 50 million in assets. Why are they competing with these other products that have a billion? It's because they want to keep these things as options for their clients and the people that they engage with. But yeah, I think this is for the most part likely going to be everyone. I mean, we're over a decade here, right, since the Winklevoss twins filed. So like anyone who's like been thinking about getting into this space, has done any sort of research, they already know what they're doing and they're going to get into it. And I'm sure there will be other players that enter via like leverage type products,
Right.
which we're already kind of seeing. But as far as like strict basic spot exposure, I'd be surprised to see anyone completely brand new that hasn't already been tinkering in the space. But time will tell.
All right, so let's talk about expanding this. I know you don't want to kind of put the cart before the horse, but the point is I think a lot of people are saying this is going to happen at some point. We're going to see this occur. You see what's happening out there. I think it was the Hong Kong. Yeah, Hong Kong considering allowing retail access to spot crypto ETFs. So this is somewhat of a new instance. Obviously, Bitcoin ETF. But what are your thoughts on that once that we do see a Bitcoin ETF of Ethereum, or if we do get regulatory guidance, potentially seeing crypto ETFs start to hit the market within the next couple of years?
Yeah, so one, we do have an analyst in Hong Kong who's been calling that Hong Kong is changing paths and they're going to allow a spot crypto ETF. She was saying, I think by the end of the year was her ultimate take, and that was a few months ago. So the Block report is kind of confirming something that we've been saying internally. As far as other crypto ETFs go, the only one that's going to come on the spot side, in our view, is Ethereum. I think it could happen by the end of May, before the end of May 2024.
Okay.
Basically, if they approve these spot ETFs like we're expecting, they've already approved the futures ETFs in the same way that they approved the Bitcoin futures ETFs. There's just very little wiggle room for the SEC to basically say Bitcoin, which also has CME futures and futures ETFs, now we're not going to allow Ethereum spot, which have CME futures and futures ETFs and things like that. So my view is my base case is that these spot Bitcoin ETFs are getting approved, and then Ethereum is also going to be approved in 2024. But nothing else beyond that is my view, because those are the only two things that have CME futures. Those are the only two things with futures markets that are covered by the CFTC and a regulator in the United States. And also, like, you can just see it in the language. I was saying this in the summer. I think right after I went on your call, I was on your show last time. I didn't think Ethereum ETFs would happen, but there was a huge change with the way that Ethereum futures ETFs happen. Basically, this one issuer, Volatility Shares, they launched the 2x Bitcoin futures ETFs. Right before that, Direction and ProShares, which are two big issuers, withdrew their applications for 2x Bitcoin futures ETFs. And what happens is the process for these spot Bitcoin ETFs is a little different. Go through this 19B4 process and this S1 process. With the 1940 Act ETFs, which are these you can do with a futures product, they don't have to go through that 19B4 process. It's a little more streamlined. You have like a clock that starts. It's like 75 days, and then after 75 days, you can go effective and theoretically launch. For the most part, issuers, like for the last few years since this rule was instituted, if the SEC tells you to withdraw, you just withdraw. It's just like you get an email or you get a call and it's like, hey, we're going to need you to withdraw that. We don't want it to go live. What we're almost positive has happened in this summer was Volatility Shares basically played chicken with the SEC and saw the writing on the wall with what was happening with the Grayscale case and said, all right, you want us to withdraw, you're going to have to send us like essentially an official cease and desist. Like, you need to send us an official letter, because then we're going to take you to court and you're going to have to explain in the court why you're not allowing this to go through. So they got the 2x Bitcoin futures ETF launched. And then they did the same thing with the Ethereum futures ETFs, despite the fact that Ethereum futures ETFs were withdrawn a month prior. Like right when I was on your show, it was less than a month prior where everyone withdrew them because the SEC stopped it. And basically after that, they played the same game. They played the same card and said, we'll play chicken with you again. And the SEC called all these other Ethereum futures ETF issuers and was like, all right, we're willing to review. And that's when we said they were going to launch in October. So I quickly, within a month, went from not going to happen this year to going to happen by October, like 80% odds, like very quickly, within a couple of weeks after seeing what was happening there. So for all those reasons, we think that's going to happen. But also, the SEC is kind of like push Bitcoin and Ethereum over here on one side, and all of the crypto assets, they're still going hard. Like you can see it in the lawsuit they're going after Coinbase for. They don't mention Bitcoin or Ethereum. They call Bitcoin a security. He won't say anything about Ethereum, but he will call all these other tokens to be security. So you can see it that I think the SEC and Gary Gensler specifically have basically decided that it's not worth it to fight on the Ethereum and Bitcoin side here, but they're not giving up the fight on anything else. So I think it could be a huge gap between the Ethereum ETF launch and anything else. That said, a change of administration or a congressional act or something like that could change this whole conversation, but that's the base case right now in my view.
Yeah, no, I think that's a good analysis. Last question to you is this theory that's out there right now. Arthur Hayes has put one out. BlackRock ETF may kill Bitcoin. This is his whole kind of concept around the centralization, really, is what it boils down to. He's questioning that the consequences of the majority of Bitcoin ending up under basically just a few custody institutions like a BlackRock, who is a behemoth, could take the market by storm in terms of market penetration. What are your thoughts on this? I mean, this is something that a lot of Bitcoiners have been concerned about. What do you think?
People have made the same complaints about gold ETFs and other precious metals ETFs. I don't think he's completely wrong, but also this is only additive to the space, right? Like if anyone really wants to, they can get their assets and handle their Bitcoin in their own cold wallet, hardware wallet, what have you. It's not like it's making this so that no one can use the Bitcoin blockchain or Bitcoin base layer in the way it was intended. No, it's not stopping any of that, right? But I do think there is some truth to the fact that this might cause some more centralization of storage of Bitcoin. I mean, it's already happened. I mean, look at GBTC. It holds like it holds, I don't know what the exact number is, but it's over 3% of the outstanding Bitcoin. So we could likely see something similar on with these ETFs. But again, it's not there. Everyone's just only talking about BlackRock. There's 12 ETFs that are filed here, right? Sure. So even still, all these ETFs are going to use different custodians. Not all of them, but some. Coinbase right now, it's possible that we see ETFs that are going to distribute their custodians stuff. I might use Coinbase as the primary, then they might add Gemini or BitGo or some of these other players. Fidelity is doing their own storage. WisdomTree is doing their own sort of storage too. So it's not necessarily going to be completely as centralized, but there are legitimate risks. I just don't think it's going to deter from the underlying use case and the main reason that people would use this. If anything, it's just going to take supply off the table. And then that leading into supply dropping from the halving is so you're going to have increased demand from these things launching because more people have access to it that are never going to have a cold wallet or download these apps, and then supply is going to come down when the halving happens.
Yeah, and I think further in that article, he was suggesting that entities could prefer holding Bitcoin really more around the issue of taxation and servicing these debt. So I look at it this way, because you're opening up, first of all, now you've got a pretty much a regulated asset here that is coming under an ETF. And it's likely that we're going to see a lot of entities flood into that market. I know many businesses would prefer to go this route. And if that is the case, especially with the scenario of taxation and some of the potential benefits of being able to do this, from whether it's an entity, businesses, all sorts of organizations that are going to go in this direction, which gets back to his point of that it seems like it could start creating this funnel of centralization. So I guess that's the question he's trying to bring to the front.
I think he's probably going to be somewhat accurate. The problem is the ETF wrapper is just so efficient and so useful for so many different people. Whether you're an institution or we're talking about my grandmother, like you're buying the same product, the liquidity is there, the fees are driven down because there's so many different players. So these things are going to become very cheap to hold. Who knows what they're going to wise initially, around 50 basis points. I mean,
Yep.
GBTC right now is 200 basis points, 2%. So we could see things drop even significantly lower. We have gold ETFs that are under 20 basis points to hold. There's nothing saying that we couldn't get to the same realm of possibility or even cheaper for Bitcoin ETFs because unlike gold, you don't need an actual physical vault and people manning it to store the gold. So
Do you
there
think
are
this puts
dramatic benefits from demand here.
Yeah. Do you think this puts any major pressure on exchanges like Coinbase? Because obviously fees will become a major factor. This is going to exposure to one, the number one asset in the, in the class. Would it potentially put some more pressure on Coinbase?
So there's two ways to look at it, right? One is I do think the will take away from liquidity on spot Bitcoin exchanges. But again, it's just Bitcoin right now, and then theoretically it will be just Ethereum. And a lot of the trading actually happens in all these altcoins or shitcoins, if have you. So that's one aspect. But I do think it will steal some liquidity. Like I said, no commissions, and the spreads are going to be penny wide, which you're not getting on these other exchanges. So it's going to drive down costs there. But the other side of it is Coinbase and these other likely to be custodians of these ETFs. So yeah, they might not be as subject to the whims of the market with massive amounts of trading, but they're going to get stable value from, I don't know exactly what fees they'll pull in. We'll say, I'll guess like 10 basis points. That's a complete utter guess for the amount of assets under being custodied by these products. So it's going to be more stable flow. And also they're building out all these other products, right? It's not just the trading, but I do think it will hinder their income from Bitcoin trading. But I guess time will tell on that front.
Yeah, well, they had a pretty significant, trading revenue center for Bitcoin in general. So when you looked at their last quarterly earnings, one of those was, of course, a specific spike in what we've seen in just Bitcoin trades. Obviously, throughout this last, 30 days, we've seen Bitcoin go from, well, look at it for year to date, 16 to 35K. That's a lot of trades that have been moved in and out of Coinbase, which will be very interesting to see how this goes for sure. Crazy.
Yeah,
James, it's all.
I was just
Go ahead.
last thing that I wanted to say was, the spikes obviously matter, but the fees are just really high for Coinbase. That's the one thing that I think is going to have to come down if they do ultimately want to compete with the ETF with the commission trades. If you're using the Coinbase app directly on your phone, you can be paying 200 bips on a round trip trade, 300 bips on a round trip trade. So I think those are going to come down, and that's some of the stuff that Coinbase is benefiting from in this rally. But I don't think that's going to last in perpetuity as more competitors come into the space, including ETFs.
Yeah, I totally agree. James, it's always fun talking to you. I always learn something new, so it's great having you on the show. Hopefully when these things get going, there'll be a lot of exciting conversations we have around strategies and what are some of the best tool sets to be watching for some of these institutions taking this out. Thanks again for stopping in. We appreciate it.
Thanks, Paul.
You bet. All right, so you guys are listening in over on the podcast side of things. Make sure and jump in over here on the YouTube channel. It's one of the best places to get additional content. But if you really want to amp up your content flow, go over and join the Diamond Circle. That's one of our best places to get additional podcasts, also additional analysis, research, etc. We do our own sentiment analysis over there as well. Just go to pbn3.substack. It's very easy to join. Click the link down below. If you guys want to catch me on X, it's @PaulBaron. Catch you next time right here on TechPath.